down 49% in 2022. Is Amazon stock a buy for 2023? I'm going to answer that question by the end of this video, so let's get right into it. The first metric I'm going to look at to determine this is revenue, and looking at Amazon's quarterly revenue growth over the last 10 years, we see a very nice looking upward chart here. Of course, fluctuations because the business is seasonal, gets higher sales during the holiday period, and then the other quarters it's a little bit lower. But looking at the trend overall, you see a nice healthy growth. That growth is a little bit challenged in the near term, I will say that. The boom that Amazon experienced during the pandemic is going to be difficult to continue expanding upon as consumers are making up for lost time in spending on restaurants and travel and away from home experiences, and that's taking away from their online spending, and so that's going to hurt. That's going to pressure Amazon's growth in the near term. I would say over the next 3 to 8 quarters, it's going to be pressured in terms of consumer sales, consumer online purchases. The next metric I'm going to look at is Amazon's operating income. And again, I'm going back several years, all the way before 2014. And what we see here is a huge drop after the boom during the pandemic when it exploded. We see here was where Amazon was before the pandemic, a nice healthy upward trend, just like revenue. And then the pandemic hit, and it wasn't necessarily all great news for Amazon. It wasn't necessarily all great news. And I would argue that Amazon did not do an excellent job in running the business during the pandemic. And we're going to see several metrics, and one of which is the operating income in that tells that story that they kind of didn't handle that volatility really well. And that's no criticism on management. Imagine you're running a several $100 billion business, and then you get this 30-40% boom in customer signups and customer orders, and you're having to now deal with this 40% boom when you're already at the capacity of several $100 billion per year. That's not an easy thing to do. And so, when management was discussing these trends as it was going through it, I've been following Amazon for several years, and I go through each of their conference calls. And what management was saying was, hey, look, we know this is going to be difficult to precisely figure out, but what we're going to do is we're going to err on the side of the customer experience. So we're going to overinvest so that we can make sure that the customer experience remains good. And if that means that our profits are going to be hurt, then we're okay with that. That's management thinking. That was management's thinking during the time. And fast forward to 2021, 2022, that's what's happening is now that overinvestment is hurting its operating income. You could see here it fell to 2.5 billion in the most recent quarter. It hasn't been that low since around 2018. So it's lower. Its operating income was lower than what it was before the outbreak. Um, and it's probably going to be pressured for the next several quarters for the reasons I already mentioned. Consumers are spending on things outside of the home, so revenue growth is pressured. Meanwhile, it's going to be difficult for Amazon to reduce those expenses because many of those expenses are fixed expenses that they are going to have to pay regardless of what revenue is. Think warehouses, planes, logistics, transportation, and all of those types of things that's difficult to reduce when sales fall. So it's going to need to wait for it to grow back into these fixed investments. The next metric I look at is cash flow from operations. And again, you see a lot of fluctuation because seasonality of the business and the investments and inventory and all of that. But still, if you exclude this last after the peak, you saw a healthy upward trend at the peak and also a healthy upward trend in terms of the bottoms here. So you had the business moving solidly upward in terms of cash flow from operations. That is until the post-pandemic investment cycle. Amazon was regularly investing 50 billion, in 2020 and 2021, 2022. I think their capital investments exceeded 50 billion in each of those years. And so now that's weighing on the cash flow from operations, and the decreases in net income is also weighing on cash flow from operations. And again, like operating income and revenue, it's likely to be pressured for the next 3 to 8 quarters. All right. And here's the big reason why operating income and cash flow from operations is going to be pressured. Look at this huge jump in total employees. You had of course, the company was increasing employees all throughout its years. It's a growth company. You would expect that. But in 2020, as a result of that boom in sales, Amazon just went on a hiring surge. It was hiring anyone and everyone, it seemed like, offering bonuses. They even had a commercial for employees to try and attract employees, right? That's rare. How often do you see a company advertising a national advertising campaign to attract employees? Typically, advertising campaigns are for brand awareness or to make sales. Amazon had an advertising campaign to attract employees, telling them about the sign on bonus, the college pay, and all of that. And it worked. They got on all of these employees, right? They went from roughly 750,000 employees to 2 million employees, almost tripling the amount of employees they had in just 2 years' time as a result of the surge in business during the pandemic. But what's happening now is that growth is kind of, you saw that in revenue, it's leveling off, it's slowing down. Meanwhile, it still has these 2 million employees, and we haven't heard anything of in terms of a major layoff or major firings from Amazon to bring their employee base down. And in fact, one analyst asked management in its most recent quarter about, reducing expenses, and management said that, right now during the holiday season, trying to control expenses is not something that we're trying to do. So if we were to do that, it would be later on sometime in 2023. So they haven't even started, working on this fact. So, another reason why I say operating income and cash flow from operations is going to be pressured. All right, and finally, let's look at its valuation, because the stock is down in 2022. It is down, and so the valuation is also down. The price to earnings ratio has came down to 77.82. It was a bit higher earlier in 2022, but it's also, more expensive. It's also just about the price it was trading at in 2019, 2020, before this wild fluctuation from the pandemic, this big up and down cycle that it experienced. And so, all things considered, if I was to answer the question, is Amazon stock a buy for 2023? I would say no. I would say no, because of that, what I showed earlier, 2 million employees at a time when revenue is decelerating and at a time when consumers are spending more money away from home. I do expect the business to materially improve in the second half of 2023. It's just a matter of how bad are things going to get in the first half of 2023. So I'm going to be updating you on Amazon's progress. This is a company I follow closely. So stay tuned to my channel. Subscribe if you're not already subscribed. I'll keep updating you on the channel on when is, if they make progress in bringing their expenses down, or if revenue reaccelerates. I will change my opinion on Amazon, because overall I think it's a great business. Online sales as a percentage of overall sales is going to expand for the next decade, I would say. And of course, it's got its amazing Amazon cloud business. So it is an amazing business. It's just right now it's the near-term pressures and the expensive valuation. I would say to hold off on buying it just yet. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.